In this video, we're going to talk about how we can use price action rules to help us navigate the market and identify high probability setups. As a price action trader, I need to first identify the overall market structure so I can predict where the market is going to go. And right now I can see that the main market structure for the most part is sideways. We are a part of some neutral consolidation. There is slight bullish bias, and I'm going to focus right now on the most recent trend available. Every single time I have neutral bias like this, I want to follow the trend line rule and I want to focus on the most recent structure, because everything else right now is pretty neutral without any confirmed bias. So let's see what's going to happen. Market keeps working hard like this, and this short-term trend is confirmed. So this is what's gaining right now my attention. Of course, I'm not thinking about selling because the uptrend is in play. Now, what I like doing is I like measuring the visual first leg. I'm going to copy it and predict where the market is going to go, because market tends to move in pairs of twos. So if something resembles two-legged pullback, I'm going to definitely pay attention to this. So I'm going to measure the first leg, project where the market is going to go. And right now, we still need to reach the measured move. So I'm still thinking about buying. Okay, we're very close to reaching this. And we reach the measured move almost to the very tick. We have a break, so I expect new high to be tested following the trend line rule. And we already have a new extreme. There was pretty much no opportunity for me to go long. We just had very tight channel, bunch of first entries. What I need to see is some two-legged pullback at the EMA at the key entry point. And right now, the measured move was reached and short-term uptrend played out. So I'm going to pause, looking to go long. Now, even though this was some consolidation, as you can see, key levels, they have no confirmations. So right now, this is pretty much very neutral bias here, not really confirmed trend range. I'm not particularly expecting market to go back in this trend range. I'm just going to focus now on the most recent structure. So let's see, I'm going to follow the short-term trend and I'm going to see what price action does. We're back above EMA, so I'm not thinking about selling. We're back above. Downtrend with the break, push to a new extreme. We have brought two legs down, one leg down, break, second leg down. So everything on my chart right now played out. Uptrend played out and the downtrend played out. You can see how broad these two legs down are, so I'm not really looking for any broader channel like this. And we traded up, okay? And market right now keeps going sideways. Let's see what's going to happen. We have what it's called triple test. One bounce, second bounce, third bounce. This would be counter trend triple test. Can I go long on a triple test like this? Not really, simply because everything to the upside played out. We're below EMA. This is super aggressive. You can see local sellers got trapped after two legs down, selling here. But this is way too aggressive. You have pretty much no confirmed trend, key entry point, nothing. So I have to remain patient still. Market keeps going higher like this. Okay. And once I can see price is back above the EMA, if I'm going to zoom out, I can already see that the bullish bias is kicking in. Okay. You can definitely see that you're creating major higher lows and major higher highs. So even though this is very weak uptrend, it gets bullish bias. So I'm not thinking about selling. I'm more inclined to go long, but there's still no good setup. High low is too big, too far up. I can't really go long, enough with the EMA. Okay, and market traded down. So right now what I'm going to do is I'm going to draw some small trend range like this, because it looks like we are part of some small consolidation at the top like this. I'm going to draw the short-term downtrend. Let's see what's going to happen. We have a, I'm going to reset the count here because we have a lot of matching highs. First entry long, second entry long. I don't want to go long just yet because the range right now is just getting established. Downtrend play with the break in new extreme. Let's see if the key level is going to hold. The key level held, and now I actually have slightly better setup. I have high-low confirmation setup. We have a new high, first entry long, second entry long. Additional short entry right into the bottom. It failed and reversed all the way back up. If there's going to be a break above this bar, it's going to form a high-low confirmation setup. So this right here is much better bar now, much better setup. And it aligns with the main bullish bias. And it looks like we spiked up and EMA is flat. We have push up, push down, push up, push down. So we're getting signs of a brand new consolidation at the top of this structure right here. So this is decent high probability setup because downtrend played out, new low. The support is holding more and more. Flat EMA indicating consolidation, and we traded up. So this is confirming the bullish bias. You have a push above EMA, and because we have push above EMA, we can start looking for some bigger channel. Also, you can go on a hard time frame and look for some bigger channel there, 10,000 tick chart. And if we're gonna start at the very beginning right here of the bullish push, if I'm gonna connect these swings right here, so I have a swing here, and a confirmation here, if I'm gonna copy it, but at the top, the uptrend actually fits pretty well. A lot of confirmations here. It's quite weak because corrections are very broad, but we have a push up, sideways push, push up, sideways push. So we are slowly but surely working higher. So we have the main pattern, which is bullish, and locally we're buying low using the trend range rules, buy low. I'm not going to be fading at the top because we traded up into this. If I trade up into this, I want to be focusing more on buying. Okay, market is correcting, and we have actually off the trend line here, new high. So like a first entry long, if reverse lower, second entry long, or you can basically view it as one high low. Now problem is this short-term trend now played out with the small break new high. Yes, there's this bigger key entry point right here, and this is a decent setup. Look at the momentum here. Price action traded all the way down, reverse all the way back up. Such a great momentum, great bullish bar, massive tail at the bottom. And this is a decent, I'm gonna view it as high low, confirming the trend line, confirming the bullish bias. Decent high probability setup, high low, and market keeps working higher, and we have a significant push phase, which allows me to trust more that this uptrend is valid. So I'm thinking about second entry long at the EMA. Once again, I'm not thinking about fading because we traded up. We're too far from the trend range, and the main bias is bullish, especially since the key level held. So I'm only thinking about right now resuming the trend. I'm going to draw a small consolidation like this. We have a lot of bars stacked right next to each other, indicating congestion. And we have a new high, first entry long, pullback, second entry long. Now, initially, I wasn't excited about this trade as much because we have so many matching highs. You can basically view it only as a first entry long, but because we can combine it with failed breakout out of this congestion, this means that the chances are very high there's not going to be another pullback. Many times through experience, you will see that once you get a failed breakout combined with a setup like this, there's not going to be additional pullback because price action will simply push higher due to the failed breakout. So because we actually traded up back above the EMA and it's a second entry long failed breakout, it's actually a decent setup to consider. I tried to take this setup, but I didn't get filled because you have to be super quick. I'm going to mark it as a great second entry long failed breakout, but it basically never came back. You had to be super quick, and market continued working higher. Count reset, first entry long, no second entry long. Okay, new high first entry long. The market is correcting lower, so I'm going to redraw downtrend like this. Okay, breaking new extreme. So right now I do expect new high, but I need to see push above EMA. And EMA keeps rejecting, and price action definitely looks bearish. Continuous EMA rejections. Buyers are struggling to go back above the EMA. The push down is looking way too structured, so I have to adapt to slightly wider channel because the correction is simply stronger. It aligns with the EMA. At this point, I'm starting to question, hold on, are we really going to get new high? Because it's not really looking like a correction. It's starting to look like a brand new downtrend on its own. Another rejection of the EMA. You're really thinking that there's not going to be new high, and market ended up working lower like this. So at this point, you are really right now forgetting about new extreme of this uptrend. Okay, you can see this was a weak uptrend to begin with because the corrections are very broad. But once you retrace so much over that 60%, you're forgetting about new extreme, and you have to adapt to this brand new structure. Bottom completely dropped, and right now our bias is bearish. So our bias right now is bearish, but I can see that this initial downtrend has massive overshoot. In fact, the push down is so strong. This is not really overshoot. This has to be some brand new uptrend starting on its own, because you cannot have overshoot that simply pushes so far from the initial trend that it's being completely ignored. You can see this push down is so much deeper and longer. It acts like brand new trend on its own. So for now, I'm going to follow this short-term push down. I would need to see something at the EMA to consider selling close to the exponential moving average. There was nothing like that. Small break new extreme. Okay, additional push down, another push to new low, so price action is still very bearish. We'll redraw the short-term trend. Okay, we have some potential multiple tests, but problem is We don't have a confirmed trend just yet. New low, first entry short, second entry short. So this is only third entry short. I really believe we need a lower high. Yes, uptrend played out, but downtrend also played out, and any wider channel is not fully confirmed just yet. So you really need a lower high below EMA to make things clear, to truly confirm that we are bearish, that this resistance is holding. Can I get a lower high? There was no lower high, and market continues to go lower. And because we have a brand new push phase, I'm right now going to draw wider channel like this, because we are evolving. This tight channel is not really explaining this entire price action, because we keep working lower after creating break and new extreme here, push down, a brand new push phase. Market geometry here is perfect, allowing me to draw trend line confirmation here. So lower high here would be really great. That never happened, and the bearish bias still continues. We have a brand new downtrend established. So I'm still thinking about selling only. I'm not thinking about buying. I want to see some pullback to the key entry point, to the EMA, some two-legged pullback. So we have a new low now. When I'm going to reset the count. New low, first entry short. Another new low, count reset, and in fact we have overshoot. Also, we are bouncing off the low today. Now this is a good lesson. The stronger and longer this trend is, the more we are ignoring the low today. Okay, at some point this trend is so strong on its own that this low today is not really that significant, especially as you can see there's only one bounce and we really never confirmed it the entire day. Okay, you can see there's a massive space between the bounce here, so this low today is not significant whatsoever. I don't have to be worried about this low today at all. If there's going to be some decent setup to go short, I can consider. Of course, I would need to disregard the overshoot, but if you have so much empty space right here, and if the trend gets so strong on its own, you don't really pay too much attention to this low today. Okay, especially since there are no bounces. This was only one bounce that sets up the low today, and there are no confirmations, so you don't have to be too worried. The trend is so strong on its own. This is the main structure. You're thinking about selling, you're not too worried about the low today key level. I'm gonna redraw the uptrend because we had overshoot and the correction is in play. I have a double trap, but uptrend is still in play, potential overshoot. I need a lower high at minimum, and market keeps working lower, completely negating the overshoot. It's not acting like overshoot at all, which means I have to widen the channel. It looks like the channel is a little bit wider, so I'm still thinking about selling. I still need to redraw the uptrend. New low, resetting the count, no break here. First entry short, so second entry short below EMA would be okay. First entry short still in play. There is no second entry short. It happened here, but it's so far from the EMA I can't take it. Okay, once again, new low, first entry short, second entry short. But look at this, it's not full at the EMA. Not even the tail is touching it, let alone the body. We cannot go short just yet. We need to see price action correcting to the EMA like this. This is still too far away. This is typical how double trap tends to form. When the second entry short is not full at the EMA, you will get the one push up, trapping them early sellers, and then double trap will form. In this case, this is a horrible bullish bar, and I cannot sell below bar like this, so I would need to see some lower high. That never happened. Okay, and market is correcting higher, so I'm gonna redraw this correction. My initial thought process is waiting for breaking new high and then getting the push below EMA and expecting the new extreme. That's just gonna happen. The market keeps going higher, and we completely reversed. Now it's getting way too late to take any setup, but we completely reversed with our new extreme again, and now the market is about to close. So this is the overall structure for today. Quite a unique price action because these trends didn't get new extreme. There is no new high and there is no new extreme. We just reverse instantly. You can find a few setups on the way up. Even if you're a little bit more aggressive, you can make a case for this triple test or this second entry long because you trade up with bullish bias into small consolidation. So you're combining bullish trend with range rules, buying low. But there are very few setups on the way down, even if you're aggressive. Basically, first entry short here, no entry. Short-term trend in play, no entry. First entry short, no entry again. So maybe some aggressive setup right here, but once again, not that clear. So no setups on the way down that are super clear textbook. So you just have to watch this go down. Normally I record my sessions on Friday, but today I really didn't have the energy, so I was just patiently watching this and I wanted to go back and explain how price action developed. But I hope you're good trading. I'm going to wrap it up. I'm going to talk to you next time. Good luck with your trading.